Okay, this is post-Liberation Day. I'm doing my review. I'm gonna try to keep this short and sweet because there's not a whole lot I can talk about on a lot of them. We just kind of went down. This is the S&P ES on the daily. We can see we had this gap in between. Just that was an hour's worth of gap on the daily. This is from 4 p.m. Central to 5 p.m. Central. We had this gap and we just kept going down. We made a lower low. Uh, Underneath this line here is kind of like support and resistance zone where we were both kind of resistance and support right here. So I've got that drawn out. And let's see if we head to that area. All right, so today I took a couple of the volatility was crazy, and honestly, I was scared. I should have just traded micros, to be honest with you, but I didn't. Too stubborn because I was so scared that I was getting out of trades way too soon. But you can see yourself going from $100 up or $50 up to $200 down, and you're almost getting stopped out. And so I was getting to the point, as soon as I got some green, I just got out, which is bad trading. That's not the way to trade. I should have traded micros, but all right. Anyway, okay, the hour. I wanted to trade the hour today. I didn't take all of the trades. But starting off the day on ES, obviously we're bearish. This area right here was like a resistance zone. We got here and we kind of stopped. So I looked at this trade. I didn't take it because I'm kind of refining my hour strategy. So since I saw this resistance, I looked on the 5 minute, saw this was, I'm sorry, not resistance, support. I was waiting for us to break this support and go down. Oh yeah, then I'll talk about this blue line here. But anyway, we did break that resistance level and we came down here. I just put the line there to let me know that this was another level of support. There was also this line, which was the previous bottom, this pink line, which I will move down. Let's see. So we hit this level, which I've developed another way to figure out targets. I'm always struggling with targets. But anyway, let's finish this. We went up. We got close to the 20-day moving average on the hour this candle was a complete wick. We had a green candle, completely green candle here with a higher close than the last candle. And then we had another candle that wicked. So we got to this level and we just completely wicked down, back lower. And so the trade I took was off of this candle. This was the 11 o'clock central candle. And this was the trade that I took. And I wanted to get in at the bottom of this candle, predicting a movement downward. Okay, and as far as my targets for today, I've learned to use the Fibonacci. A lot of people use it. I haven't been using it. I know about it, but I haven't been using it. So I looked at the fibs, figure out what I thought we'd hit today. So I put you put a fib at the bottom, put a fib at the top, and a lot of times what we'll go to is right around the 161.8, I believe it is. Yeah, 161.8. And it depends on how you do it. Cancel. So the first time I did it, I put this blue dashed line here. That would be my target. We went right there. But yeah, so that's what I'm going to start using for my targets. We'll go down lower into the 212 and the 30.5 are custom ones. That's not typically on a Fibonacci. I put those there to be half of that. Because normally it's the 100, the 168, 161.8 and whatever. But I put ones in the middle of that. But anyway, that was my target for today off the hour chart. So, and looks like that was my target for today, and looks like we hit it. So let's see. Yeah, that was it. It's just for the hour. All I wanted to see is a break of this. which would also be under the 5 EMA. That could have been taken. Then we had this next candle was a green candle. We went up and we made a higher close. Then we made a pretty much even close. And I just wanted to see a break of that. We got the break of that. There was a break of this, the bottom of this hour candle, break of this candle, and they were consistently going down. So I've kind of been playing it like that, along with the 5 EMA, of course. Let's see. Let me go to the 5 minute real quick. All right, the 5 minute. Okay, this was the break I wanted to see, and I watched it. I didn't take it because I still wanted to watch it. So we had a closure. I wanted to see a candle close below this, and a retracement back up to around the 5 EMA at least. You know, my usual retracements that I like to see. We had this green candle. We got above the 5 EMA. And we had this candle here close below 5 EMA, and it made a lower low. And so that could have been taken here to here. So that would have been actually a really good scalp. I looked at it and traded it in my head, but I didn't take it. So I got in here at 81 is what I said, and my target would have been 10 points. I would have just went for, because the stop would have been 10 points. I would have had a 10-point stop, which was 91, and I would have been looking for a 10-point profit at least. So 81. Oh, man, I could have got way more than that. 71 was here. So that would have been my target. Right now, that's when I'm doing one-to-ones. One-to-ones seem to, as long as I stay disciplined, it still keeps me profitable right now. So I feel okay risking. This would have been 500. And see, that's the ATR is really high. So I would have had to risk, I would have wanted to risk 500 to make 500. So it's pretty costly today. And then we went up, and the trade, this is a trade I took. This was after the 11 o'clock candle was finished. So we were at 12 o'clock Central. And so I looked at the chart, and right around here, we kind of like stalled. That's why it's such a small doji candle. But I had a line drawn here, and I needed to see a candle close below it. And we had this big red candle close below it. I saw my pullback, and I got in at, let's see, yeah, this candle closed below the 5 EMA, and we had a closure below the prior open. And I got in at the tip of that candle. It went up a little bit, and then I got in at the tip of that candle. I should have held to here, but it was just terrible today. I should have, like I said, I should have traded micros. And so that was a trade I took. I only took a little bit of it. I took like 100 and something. So that was a bad trade, but it could have been actually a good trade, even if I held to here. Because if I got in here at, let's say 88, and I got out at 81, that would have been 88, 81, that's 7 points, $350. And my stop, I could have definitely had a 7-point stop and a 7-point target. And that would have been a good trade, but I didn't even wait for the 7 points. That would have been $350. I got like not even half of that, I don't think. But anyway, then there was more trades. If you're just taking an hour, then I just should have held it until here. If I was actually just taking the hour, I really should have, when I got in after this broke and I got in here, if I had micros, I could have just had my stop up here, or 1 micro, I could have had my stop here and just played it to this level, which is where we went. But otherwise, I mean, it was a decent day to trade. I mean, it wasn't bad. It was just the volatility made the trades a lot more expensive than what I like to risk. I usually don't like to risk any more than $350-ish, but like this one, I would have had to risk 500. NQ, I wouldn't even look at to trade today. All right, the daily on NQ, Okay. Again, it's the same as ES. We're approaching this zone here, which was resistance and support. Let's go to the hour. All right, it's the same. We had this here as support. I was looking to break that. We'll be under the 5 and take that lower. And we came up, and this is similar to ES. This was a trade I was taking when we got to the bottom of this. I looked at the 5 minute, looked for a closure below it and a pull up, and taking that down. And I didn't look at the fibs on this. Let me see what the fibs look like on this. Fibonacci, this was the low, this was the high. So we're almost at the 161.8. Not quite, but we're almost there. It's pretty close. It's never going to be exactly on the money, but that's pretty close if you want to looking for where to take profit. Not too bad a tool to use. I probably will start using that a little bit more. So the 5 minutes probably pretty much the same. It looks the same. Yeah, this was the break of this. Let's see. Oh, but with this one, we didn't get a break of that resistance until here, this big red candle. So yeah, that wouldn't have worked out as good because this one here was really low. I didn't take it, but yeah, because if I got in here, got down here, you'd be surprised how much money that would. If I would have got in here, that would have been, let's just say 800, and got out here at 725. That's 75 points. That's over 1,000. I think it's like 1,250 or something like that. That's a lot, or 1,500. Is that? Yeah, it's $1,500. That small move on NQ, but then you'd have to risk about $1,500. All right, so yeah, it's the same. We went up. We got across, got that bearish cross on the 5 and the 20. And then I just wanted to make sure this was the bottom of that previous hour. We broke it with this red candle. We went back up, and then you could have taken that down. And that would be trading the hour setup, but using the 5 minute for entry. And gold, I took a trade on gold today. It worked out okay. I could have got way more again. It's kind of scary day for me. All right, with gold, we went almost to the 20-day moving average. We almost hit this previous resistance area, became support today and pushed it up. And we just I watched gold. We just kind of consolidated at that 5 EMA on the daily. It was brutal just looking at it, thinking maybe I could take a trade, but we weren't going anywhere. All right, let's go to the hour. Okay, on the hour, we didn't have a closure under the 200-day moving average, the gold line on the hour. We popped right off of it. And because we had these wicks under it, which looked extremely bullish to me, because I was only supposed to look for shorts, but I took a long on gold. I took a long on gold because I saw this. It looks like there were a lot of buyers coming in when we got below the 200-day moving average. And so I was like, if we can get above the 5 EMA, which ended up being, I think, around the 50-day moving average on the 5 minute, I would go long and try to take it to the 21 or the 20. So that's the trade I took. The rest of this was just consolidation. This line I drew is the 5 EMA on the daily, and we won't go below it, but we won't really go above it too much. So, in order to, we haven't even closed above the 20. We can't even get a close above. At first, when I was looking, we couldn't even get a close above VWAP, which is this pink dash line. But we didn't want to go under this because I would have wanted to see a break over this or a break under this, and we didn't get it. 5 EMA, I'm sorry, the 5 minute. Let's see. All right, so yeah, opened up. We were bearish, and we opened up. We just became very bullish. So this was around just about at the 5 EMA on the hour. So it's the 50 EMA on the 5 minute. And we came up and we shot back down, got to the 5 EMA. And I just wanted to see a green candle close above this high, the high of this green candle. And we got that right here. And then I wanted to see a pullback to the 5 EMA, which we did get. And then if we got here, the top of this green candle, the high of this green candle, then I got in. And I got in right there. And if I had held, I was so scared because the movement was crazy. I got in probably, I think I got in at 23. And so I got in just a little bit early. I got in at 23. Even if I took this to VWAP, that would have been 35. So that would have been $1,200 just from here to here. $1,200. That's how volatile today was. And we even went higher. So, if I held to the high, just to the 200 day instead of VWAP, that would have been 48. So that would have been $1,500. But I didn't do that. I'm not used to. Firstly, I had to risk more than I liked to risk actually to take this trade. I think I ended up having to risk like 700, and I should have waited to 700. It was goofy to even take a trade where you're risking 700. I risked 700 thinking that I would hold a VWAP, but because it was moving so fast, I just got out. It scared me out, and I got to get used to that. Knowing that it was moving like that, I should have taken a micro. If I couldn't stomach that, I should have taken a micro. Let's see. So then we were trying to go down, but we couldn't close below the 50. I see we closed here, but I wasn't really watching past this time. But yeah, we just consolidated this right at the 5-day moving average on the daily. Right here is that line. All right, and gold. I'm sorry, not gold. Crude. All right. Crude, we were headed up, and then that tariff thing just blew it down. We got to this support level that's been support forever, and we're kind of just dancing there. Let's see. Check out the hour. So yeah, we got below it, and then we came back up to it. We're coming down on the hour, so I don't know how far down we're gonna go. But yeah, the RSI is really low, but that's to be expected on a day like this. Okay, 5 minute. I looked at the daily and the hour on crude. I didn't really look at the 5 minute too much. Yeah, so yeah, we got there. We kind of danced around it. We went up, dancing around it. And we kind of do that with crude. It's as far as it breaking it completely, it's been a long time since it's done that, since we got really, really low below it. I mean, really, you'd have to see, in order to consider it a break, you'd want to see it get lower. Get low as this. This is the lowest it's gotten. And we haven't gotten there. So that's crude. Let's see. I'm thinking about using stop orders to get into my trades. I don't really like to, because when I get in trades, I usually put my stop first. If I'm selling, I'll put my buy stop in first, and then I'll put my sell limit order in to go down. But if I put stop orders to get in short, stop sale, then I can't have a stop right away above it in place already. So I tried it today on a micro MES. All right, so yeah, I only took, this was the ES trade, I only took $125. When if I held to where I should have held, that would have been a $350 trade. And this gold trade I only took $240. I should have gotten at least $700-800 off of that. And this was just me trying something out with MES. If I had taken it with ES, that would have been a $300 trade. But see, I'm more willing to hold MES because you don't see such huge jumps. With MES is $5 per point, and with ES is $50 per point. So with MES, I felt comfortable holding, no big deal, because it's just, what am I going to lose, $50? But so I was just holding. I got in here and I just took it to try something out, and I got $30 out of it. Like I said, if I had taken ES, that would have been $300. So I didn't do too bad today. I would have done a whole lot better if I had the stomach to hold. But at this point in my trading career, I don't have the stomach to hold and risk as much as I would have had to risk to trade today. I should have traded micros. On a day like this, I should have traded micros. All right, that's it. Bye-bye.